Welcome to the Buffett Vault, where we cover alternative and unique investment opportunities and assets for 2025. Today we'll look at some of the best financial decisions you could have made in 2024 from around the world. Cryptocurrency has been a significant topic in 2024, with Bitcoin's price surging over 150% since the start of the year. This dramatic increase has sparked renewed interest and discussion about cryptocurrencies. The election of DJT provided some tailwind, but the primary driver was the SEC's approval of spot Bitcoin ETFs. This facilitated the influx of billions in institutional investment into the cryptocurrency market. However, Bitcoin is not the biggest winner over the past 12 months. Several alternative cryptocurrencies have posted impressive gains, and some smaller microcap cryptocurrencies have performed even better. The real long-term wealth is likely to come from this year's significant advancements in blockchain technology, even if it's not as exciting as the flashier aspects of crypto. Despite crypto's growth, it remains a small fraction of traditional financial markets. The global bond market is worth $140 trillion, while tokenized US Treasuries are only $2 billion. Global real estate is valued at $340 trillion, while tokenized real estate assets reaching just $8 billion. However, stablecoins, currently at $190 billion, are projected to grow to $3 trillion by 2028. In July 2024, the US Senate introduced the Bitcoin Act, proposing the creation of a Federal Reserve of 1 million BTC over 5 years. This signals the US government's strategic intent to adopt and position the country as a leader in the digital economy. The key implications are increasing demand and market impact. The government's planned acquisition of a substantial portion of Bitcoin's limited supply is expected to increase demand, potentially driving up Bitcoin's market value. Holding these assets long-term could reduce market liquidity, leading to a supply shock that may further escalate prices. By establishing a Bitcoin reserve, the US signals a strategic commitment to digital assets, potentially influencing other nations to adopt similar measures. In 2017, the crypto market experienced a retail frenzy. However, the focus has now shifted to institutional adoption. Over the past 3 years, major financial institutions like BlackRock, Fidelity, and JP Morgan have transitioned from skeptics to active participants in the crypto space, reshaping the overall narrative. JP Morgan, for instance, has been quietly building Onyx, one of the most comprehensive crypto ecosystems since around 2015. During this time, the bank has also publicly criticized the technology, which in the crypto industry is often seen as a bullish signal. In November 2024, Ethereum ETF assets saw record-breaking inflows with 333 million invested in a single day. BlackRock's ETHA fund attracted 250 million, and Fidelity's FETH brought in 79 million, pushing total Ethereum ETF assets under management to 11 billion. Simultaneously, the US spot ETF market added 1.7 billion in inflows over just 1 week. This drove Bitcoin's market capitalization to 1.8 trillion, and its price closed to 100,000. These events signify a broader shift in perception, as institutions now view blockchain technology as foundational infrastructure rather than mere speculation. Across the board, many commodities struggled in 2024. However, big booms came in unexpected places. Cocoa and coffee prices are up 182% and 70% respectively this year, primarily due to climate and harvest issues. Cocoa prices have been volatile in recent months. After surging 300% in April, prices have retreated from those highs. However, spot prices are now rising sharply again. The main reason for this price volatility is the impact of weather on cocoa production, particularly in West Africa where most of the world's cocoa is grown. Cocoa crops suffered in 2024 due to overly dry conditions, and that outlook remains concerning. Satellite data from Maxar Technologies indicates that dry weather in West Africa will negatively impact the early growth of the mid-year cocoa crop, which is harvested in April. Furthermore, the arrival of the seasonal Harmattan winds could exacerbate this situation. These supply-side challenges have led the International Cocoa Association to significantly increase its forecast for the 2023-24 global cocoa deficit. They now estimate a deficit of 478,000 metric tons, the largest in over 60 years, up from its previous estimate of 462,000 metric tons. Brazil's coffee harvest was severely impacted by drought, leading major coffee trader Bolcafé to reduce its forecast for Brazil's Arabica coffee production by 11 million bags to 34.4 million. This forecasts a fifth consecutive year of an 8.5 million bag deficit for the Arabica variety. The less desirable Robusta variety also suffered from the adverse weather conditions. Additionally, heavy rains in Vietnam delayed the harvest, while demand for coffee continues to rise in China. Since 2022, over 100 million birds have died from the avian influenza outbreak. The disease spreads rapidly in highly concentrated commercial poultry industry. Layer facilities that produce tablet eggs tend to be very large, so a single facility can lose up to 1 to 2 million birds when the highly contagious virus strikes, explained Amy Hagerman, an industrial economist at Oklahoma State University. The situation is likely to worsen, suggesting it may be prudent to consider raising chickens. While Bitcoin and commodities grabbed headlines, the listed private equity sector quietly delivered impressive returns. The VanEck Global Listed Private Equity ETF posted a 43.97% return through mid-November 2024, outperforming the broader market. Private equity firms were highly active, with transaction values reaching $419.43 billion by August 2024, a 24% increase from the previous year. This deal-making frenzy occurred even as the rest of the world fretted over rising interest rates. Despite this strong performance, listed private equity is still trading at a 14% discount to its net asset value. Historically, when private equity trades at a discount, it has outperformed public markets 81% of the time. This presents an attractive opportunity for investors. Looking ahead to 2025, the outlook for private equity remains positive. The Federal Reserve may be nearing the end of its rate hike cycle, China is providing economic stimulus, and private equity firms have significant dry powder to deploy. While of course there are potential headwinds, the combination of discounted valuations and robust deal activity suggests that private equity could be a sleeper hit going into 2025. Germany is facing an energy crisis, with electricity costs for households expected to be 5 times higher this Christmas compared to last year. Natural gas prices have also risen significantly, up 43% in 2022. Germanium, a chemical element unrelated to Germany, has seen a price increase of nearly 100% this year. China has banned the export of germanium to the United States. Geopolitical tensions, high inflation, and economic uncertainty have contributed to a more than 30% rise in gold prices in 2024. That's all I've got for today's video. Be sure to subscribe and check out mechanicstraders.com to begin fully automated passive income generation via our custom coded and proprietary MT5 EA bot. We offer a complete all-in-one trading package to begin your portfolio compounding with our MT5 system.